Freedom seekers, the wars are heating up in terms of financial weapons of mass destruction, but this time it's a civil war within the US. The war is the battle to control the dollar, and the players are really launching new tools. So the announcement today, the news today, is that yesterday we had a bill introduced in order to create ECASH, and ECASH is a form of the greenback, which is the dollar that was created by the Treasury under Abraham Lincoln that was designed in order to fund the US Civil War and Abraham Lincoln's war against the central banks. Now, very few people may know this unless they are monetary historians, but we used to actually fight wars over who should create the money supply. And the Fed was actually a war where banks, central banks, and the Treasury were all in battle to decide who was going to create the dollar. And so today we're going to be discussing the war on cash, the war on banks, the war on central banks, and the war on inflation. So let's jump straight in with the introduction of the bill. My goal is always to try and introduce you to concepts through new things that are happening, but also give you the historical context so that you can make better financial decisions in planning how you are going to position yourself in the upcoming currency wars. Okay, so firstly, I am no longer a conspiracy theorist, according to the fact that my book, Bank to the Future, Protect Your Future Before Governments Go Bust, said that there would be a war for the control of money, and it would be in order to try and work on what is the definition of money. So for those of you that are not such geeky monetary people as me, the definition and the supply of money is an incredibly complex subject because no one fully understands and appreciates the supply of money. Why? Because it is defined in many different ways. So in my book, Bank to the Future, Protect Your Future Before Governments Go Bust, I said in the future, money will be defined as M. And M will be the money supply. At the moment, it is all sorts of convoluted definitions. You have M0, which is the amount of cash and coins that the government through Treasury create through their mint. Then you have M1, which includes the currency that the banks create, the digital currency. Every time they issue a loan, that new digital currency is created and it exists as a check-in deposit at a bank. M2 includes more short-term financial instruments that can be converted in cash in the short term and that are less than 100K. And M3 includes shorter term cash-like instruments that are above 100K, and everyone is confused about the definition and the supply of money. And so there is very little transparency because you have all these weird financial products that are implemented in order to control the money supply because nobody fully controls it in the way that most people think they control it. So let's jump into the first thing. So how is it created today? To understand ECASH, you have to understand where we are today, and I'll propose a framework for how to analyze the difference in this ever-increasing complexity of central bank digital currencies, dollars, ECASH, stable coins, and all sorts of stuff. So let's jump in with the first one. So how is money created today? Well, the money is created today via a war on cash. And so originally, governments and Treasury wanted to control how the supply of dollars, and they did that by creating, notes and coins. And those notes were gradually derived over law. They were originally receipts for gold created by banks, and eventually they ended up being created. And the profit from creating cash and coins reduces the amount of tax that you need to pay because it costs approximately 3 cents in order to create a $10 note, and you can sell it to a bank for $10, giving you a $9.97 margin, and that is introduced into the Treasury's balance sheet as a sovereignty, which is the process, seigniorage, which is the process of reducing the amount of tax you need to pay by profiting from the process of creating cash and coins. And scenery sits on the balance sheet of the Treasury. Now, banks came along and war on cash. They said, everybody put your money with us. And through law and regulations, because they started issuing more paper receipts for gold, originally money was gold, then they ended up in bank runs and all sorts of situations because they issued more receipts for gold than gold that they held, because they realized that people weren't claiming their gold. And therefore, through laws and regulations, lobbying efforts and all sorts of stuff, banks became the creators of digital currency, the digital dollar. And the mechanism for creating it was issuing loans. So every time you borrow money from a bank, a new deposit is created, the supply of M1 money increases, and they get to charge interest on that newly created money. If you repay it, it disappears. If you default on that debt, it disappears. And so if too many people default on their debt or don't pay their debt, you get a contraction in the M1 money supply. And it drives everyone into debt, slavery, wealth inequality, and it is the world's largest regulated Ponzi scheme we have ever seen. So back in the day, in the war against central banks, as central banks came along and they introduced a new form of money supply. And that is that they try to control how much money the banks create by controlling interest rates, so that you are incentivized or not incentivized to take on debt. And they also introduced this concept of quantitative easing, which is essentially creating money in order to borrow or actually buy treasuries from the government. So the government then goes and creates more debt. They say, we'll borrow more money, and the central bank buys those bonds, and you have quantitative easing money supply. Now, the interesting thing is that there is now a war and a battle for all the different proposals of how the dollar will be created. This really was in the American Civil War. Abraham Lincoln introduced the greenback because they decided that the Treasury would issue paper money to fund the war rather than borrow it from the people or the central banks and try and keep sovereign money. So ECASH. Now let's create a framework for analyzing these different wars so we can understand and position ourselves into that. So let's start with, so you've got the money that banks create. Let's use the framework for how I've always analyzed Bitcoin and banking, back from the book that I wrote, Bank to the Future, Protect Your Future Before Governments Go Bust. I tried to share with the world that when you deposit your money at a bank, the bank becomes the legal owner of your money. They can spend it as they choose, and they can increase its supply by issuing more debt, and therefore it devalues the value of your savings, and therefore you're driven into speculation. Those that took debt, borrowed money because it would be worth less in the future, and consumed it, end on the wrong side of wealth inequality. Those that used it to purchase assets are driven into speculative bubbles, and if they get that right, they get on the right side of wealth inequality, and you end up with this ever-increasing divide, depending on how people use debt in a world where you have to have debt in order to have a money supply. And that brings us to where we are today, where everyone's over leveraged, and therefore you get the introduction of new money supplies when a lot of money has to be created in order to fund injecting the world and fund defense for the world and fund all of the other things that are happening that you have during these times. And so the first one was so analyzing that framework so you can understand the difference with ECASH. So money at a bank was actually more of a free market solution to money, but regulations turned it into crony capitalism because in order to get a banking license, it became virtually impossible and became an oligopoly. Therefore you had crony capitalism, but it was more of a free market solution. Rather than just creating money based upon how much the government wants to create, it had this mechanism by saying, if people are willing to borrow money, then we can create the new money supply. And in exchange for that, When you deposit your money at a bank, we become the legal owners. We can spend it as we choose by directing the flow of debt, and we can inflate away your savings to always encourage people to go deeper into debt so that we can have economic growth at the expense of your future savings. So it reduces the time preference, so everyone's driven to short-term decisions rather than long-term decisions, and it makes sense to go into debt because the value of the debt that you have to repay in the future will be worth less. That's the current system. So the problem with that is it creates a Ponzi scheme, and it is a Ponzi scheme where there's more debt than money. So eventually you always have to rehypothecate the debt, and eventually that leads to cycles of the world needing to having these black swan events like the financial crisis, where the weakness in the system get exposed as a result of it being a Ponzi scheme. And so therefore you either have to save it with government money, or save it with a bail-in, or save it with a new money supply. In step central bank digital currencies. So central bank digital currencies are not a free market form of money. They will be created by the central bank. The central bank's goals are to try and control inflation and deflation. Bad job, you didn't do very well. And control economic boom and bust. Bad job, you didn't do it very well because you were given tools like interest rates and trying to control indirectly how much money the bank creates, and using quantitative easing through government debt and all sorts of the most strangest money tree engineering system you could ever imagine that we end up in as a result of this. And so my forecast in the book was that you would have a transparent form of money that is created in simple terms. And my forecast was that central banks would eventually form the supply of creating M. And M is, the goal is to control inflation and deflation. You don't use all these weird tools in order to control how much money banks create. And you deleverage the Ponzi scheme, because everyone that has a deposit at a bank ends up with this new central bank digital currency. And it is not backed by debt, and therefore you can have transparency in the money supply rather than trying to have M, M1, M2, M3 and all these weird financial products where no one fully knows what the money supply is in a very clear and meaningful way. So at least you would have some kind of transparency. So this is how I was able to forecast the evolution of central bank digital currencies over a decade ago, before the term was known. And central bank digital currencies on that framework will be money that you won't own. Essentially, it will be a digital ledger where the central bank says whether you own it or not. You won't be able to spend it fully transparently, because rather than implementing laws on banks, you are getting everything closer and closer to the government, and therefore it will be easier to control the censorship on that money if they don't like the way you're spending it. And it won't have a fixed money supply, so it will inflate away the same way, but there'll be more transparency on the supply, and it won't be a Ponzi scheme because it's not backed by debt, is my guess at how they will engineer this. And so therefore you deleverage the Ponzi scheme, which is bank creates money, which is the war on cash, by creating a war on banks. And the war on banks is the creation of central bank digital currencies. You can have technology where financial technology companies can build on top of the central bank digital currencies, and you can create a tool for not having to bail in or bail out banks as the weaknesses in the Ponzi scheme expose itself. Now ECASH, we're finally at the part of what is announced. ECASH is a proposal where Treasury create the digital currency. And so it is, the proposal is actually a very interesting one, because it wants to replicate the properties of cash, i.e. that it is anonymous, but the on-ramps and off-ramps are controlled, just like it is with cryptocurrency at the moment. You can transfer a cryptocurrency anonymously, but when you want to purchase it with your fiat money, you go through all the laws and regulations around anti-money laundering, in which case the financial institution needs to identify who you are, They need to understand the source of where your funds came from. They need to understand the source of how you obtained your wealth. And they need to implement a transaction monitoring scheme in order to ensure that the financial system knows what that money is being used for. And it creates lots and lots of financial exclusion as a result of that system. However, ECASH is designed to be anonymous transfer, much like cash. My guess is, and the proposal is, that you can own your money as well. So let's look at it in the framework of how I analyze Bitcoin and other forms of money. Can you own it? Well, they're stating that you can do peer-to-peer electronic transfers. You'll be able to own it in a wallet, just like you're able to own Bitcoin. And if somebody steals your wallet, just like cash, they're able to steal your eCash balance. Secondly, they're allowing for peer-to-peer transactions, but obviously on the on-ramps and the off-ramps, they'll have control, they'll have serial codes, and so there will be mechanisms for controlling the way in which it's spent, but the proposal is to not have such mechanisms to have a peer-to-peer currency. And then the difference is obviously, how will the supply be created? And that's the devil in the detail. Now, if this can just be created as Treasury sees fit, then we have a war on central banks. And so at the current system, you have a war on cash, which is the Ponzi scheme called bank created money. You have a war on banks, which is central bank digital currencies. And then you can have a war on central bank digital currencies, which is Treasury created digital currency. This is modern monetary theory, where money can be created in order to achieve fiscal goals. If you're not familiar, they have, or they try to achieve, some degree of independence between fiscal goals, which is how governments decide to spend money to meet government goals, and monetary goals, which is how you control the money supply, which is meant to be done by the central bank. Those two are meant to be independent so that corrupt officials can't say, create more money in order to fund this. But we have seen clearly that monetary policy has merged with fiscal policy over the last years as they create money in order to achieve fiscal goals. So that independence is becoming blurrier and blurrier and blurrier. And more recently, in the book, Bank to the Future, Protect Your Future Before Governments Go Bust, I talked about this importance of independence when this new money supply comes through, but it will be modern monetary theory. And modern monetary theory is the mechanism for when you converge the monetary policy with fiscal policy, which is the scariest part of the world. To me, that is a transition to a more free market way of managing economy to a more communistic way of managing economy. And I'm not placing judgment on either of those mechanisms. I'm just explaining that this is a slow shift by having such a mechanism. Where the supply is created in order to meet fiscal goals, which leads to a bigger and bigger and bigger and bigger government and more control over the money supply, which is why, of course, when you combine the process of government's goals and agendas with monetary policy, the end result is always hyperinflation. The reason being is because you have a 4-year election cycle, and no matter how left-wing or right-wing you are, people vote based upon what you will do for them. You can do more for them if you create more money, and if you create more money, you can make more promises, which gets you more votes, and if you get more votes, you then get the backing of the people, and you have 4 years in order to do that. Now, if you implemented any kind of monetary reform, you would be voted out, you would be demonized as the enemy to all of the wealth inequality people that have got on the wrong side of this because of the systemic nature of the system, and through some fault of their own or no fault of their own, they got on the complete wrong side of the system, and therefore you won't be able to get into politics, which is why it is a self-perpetuating Ponzi scheme, because of this inherent human nature of being on the wrong side of debt slavery, therefore requiring the government to do more and more for you, and therefore them making promises based upon expenditure, which means that the money supply will bloom And when you have these checks and balances, which is when the banking system explodes the Ponzi scheme through debt, central bank digital currencies can come in. When the central bank digital currencies create too much, Treasury can come in and create more ECASH. And that is the importance of the fundamental mechanism for freedom and sovereignty, which is the war on inflation. And the war on inflation is where you finally start to understand why Bitcoin is not a Ponzi scheme, not a currency just for drug dealers, not a get-rich-quick scheme in order to make more fiat, but it is actually a lifeboat and a regulator of the regulator that regulates the entire system as we move into these currency wars where banks wage war on your cash, central banks wage war on banks, and Treasury wage war on central banks. And all of that leads to the inflating of the money supply because no one has the check and control of the supply of Bitcoin. And so this is why it's such an important thing, because Bitcoin is, as I say in every single video, and in the comments you'll probably always talk about how repetitive I am, but I think that repetition is the mother of all learning, and new people are watching these videos every day. Bitcoin is money you can own, money that you can spend peer-to-peer, and money that has a non-politically affiliated, geopolitical neutral supply enforced by maths and code and the largest supercomputer in the world that cannot be changed no matter how much there's a war on cash, a war on central banks, a war on banks, or a war on any type of currency war. So that is, and if they could shut it down at this stage, they would have shut it down. And if you haven't watched my videos on Bitcoin bans and the new Bitcoin bans and the different types of Bitcoin bans, check out the video that I released yesterday. So ECASH is the proposal, and I hope that this gives you more understanding of why these things are important. It is very murky and hard to see the difference between these things, but analyze it from the framework that I released to the world over a decade ago in my book. And by the way, if you would like to understand how the hell you position yourself to build and protect your wealth, head over to retirementplanb.com/book. You can get a free PDF copy of the book. You can get free 4-part video series on exactly how I invested before this became a thing and how I invest today. And if you really want to go crazy, there's a complete masterclass and all my emergency broadcasts that you can consume and binge on with hours and hours of content, all completely free at retirementplanb.com/book. And I will be releasing and updating a decade later, off the Bank to the Future, Protect Your Future, before governments go bust, my new book on understanding the rules that govern money for yourself, your company, and your country. So always remember, you are alive at one of the most interesting and exciting times in financial history. Some are going to get hurt. Others are going to do incredibly well. What I ask of you is, if you like this video, if you share this video with your loved ones and people you care about, if you hit that subscribe symbol button on YouTube, hit the bell symbol and hit all, then YouTube will notify you every time I go live. And every time I go live, my goal is to give you some kind of information on something that's happening today, with the goal of you being able to build and protect your wealth in one of the largest changing environments that we have ever experienced today. And if you're a financial freedom seeker and you enjoy this channel, then we're going to be doing it with peace. We're going to be doing it with love. We're going to be doing it with unity. And I appreciate your help in getting more than the 77.7 thousand subscribers to this channel. I think it should be in the millions in the future, and I'm going to need your help to do it. Peace.